Just wanted to briefly start showing you how we do some of our due diligence, or DD as some people refer to it, on a stock that we're considering to add to our watch list, potentially buying. In this case, I'm looking at Pets, which is PetMed Express. I found this in one of my other queries as a potential one that I want to watch. I've already searched for it, but if you're searching for stock, you can put it in the search bar in finviz.com on any page that has a search bar. Again, you can find our affiliate link to Finviz in the description box below. First thing I do is I'm looking at the chart and I'm looking to see if it's approaching some kind of support level. This one's a little tricky because it's got this unusual spike down at an earnings date, but I'm looking for, is it approaching some reasonable support level where it's touched that support level a couple times. So somewhere in here, it doesn't look bad. I see two touches in the 2640 area, so I want to dig a little deeper. This is one I might want to consider for a swing trade buy long. So now I'm going to scroll down. We can see the description to PetMeds, what industry it's in, it's healthcare, what sector it's in. It's a online pet medical pharmaceutical retailer. And then I'm going to look at, okay, is this a profitable company? Given the market conditions, if it's not profitable and the market's not conducive to growth companies, then I might not want someone who's got a negative income and low sales. In this case, their income and sales look good. Looks like they're profitable from an initial look. Look at their cash position. A great one is to find somebody who's trading below cash, who has more cash per share than their current stock price. Look at book per share. Again, ideally, the best values are ones that are trading below book. That's not the case here. We can see PetMeds also pays a reasonably good dividend, 4.46%. So that's attractive. And I'm looking at debt. Do they have really high debt? Is that going to become a future issue? No, looks good. They look to be pretty debt free. Here's the ratio: price to book, price to cash, free cash flow. All look reasonable. So again, these are all positive signals from Finviz standpoint. In this particular case, one thing that's attractive, if we're in an environment that is conducive to potential short squeezes, for example, the meme stock phenomenon, the Wall Street bet people targeting stocks with a high short interest, this is showing a short float of 24.91%, which is very high. So that says this guy could be a candidate for a short squeeze attack. So again, that's a potential positive sign. We saw these high pops in the past. Those may have been short squeezes at those times. So again, all these signals look good right now. Another thing that's interesting is the recommendation is very negative. So that says analysts may have a very negative view. In this particular case, I find that attractive because it says that the sentiment may be overly negative on this stock, given all the other indicators I see seem to be positive. Okay, so the other things I'm going to look at very quickly is I'm going to look at the description of the stock. What exactly do they do? Is it reasonable given the current trends and themes in the market? Okay, they're a pet pharmacy, on a prescription, non-prescription pet medications, etc. So why is it down? So a couple of the things in the current environment, given the pandemic, they may have been pushed down due to the reopening and people thinking that this was just a stay-at-home lockdown stock. So they pushed it down because now we're reopening, people aren't buying lockdown stocks. That may be one reason. Other reasons may be competitive pressure from Amazon. That's possible. they're starting to get into pharmaceuticals. That pushes other pharmaceuticals down. Also, we have the Biden administration talking about regulating drug prices. Well, this is pet meds, so I don't see that having an impact on this particular stock. So again, think about the themes, what's going on, what do they do, what are the risks. So then I want to look at their statements, their financial statements. And in particular, I want to see, okay, recently, are they still profitable? So I'm going to select the quarterly tab, and what I really want to see is these EPS numbers. Okay, so they're positive, so that says they're probably profitable. We see they're declining a bit, but this again could be potentially that the reopening has led people to go to in-store versus online or via phone buying for a short period of time. But again, it's still positive. So at this point, the indications are positive. I'll do further due diligence in a moment. Another thing I wanted to look at in the chart, though, is the risk reward. So I'm going to zoom out to the weekly chart, and I want to see, does this have a reasonable risk reward that I want to consider? So we found out that, okay, this support level is somewhere 2640 area, and it looks like the next low may be in the 21 area. So my risk is essentially, let's call it $4, $5 to the downside. So my risk is $5. My upside potential, if we look at this peak, and we say, okay, $46, $47. So my upside is $21. My downside is $5. So I've got a 4-to-1 or better reward to risk ratio. I like to target 2-to-1 or better reward to risk. So again, this one looks good. Now I want to dig deeper to see if there's any red flags that would cause me to not add this to my watch list. So again, this is the start of how we do some quick due diligence on a stock to consider to swing, buy long, using FinViz. Again, you can find an affiliate link to FinViz in the description box below. And now let's dig deeper. Another site that we use to do due diligence on a stock that we're considering for our watch list is Seeking Alpha. And I will put a link in the description box below to Seeking Alpha. And usually we do this after we've identified a stock that has potential, usually in FinViz, potentially another source, and we want to dig deeper and see if there's any red flags, check some of their other metrics in more detail. So this is a deeper dive of the due diligence, or what people call DD, on a particular stock. So again, once I'm on Seeking Alpha, pretty much on any screen, we can see there's a search bar. I can search for the stock that I'm looking for. In this case, I'm looking for PetMed Express. I've already searched for it, but you can see it will list potential matches. I select the one I want, and then it will display the detailed screen. It has many tabs. You can dig even deeper into various categories. I'm just going to look at the summary screen and scroll down and show you briefly how I do a deeper dive on the due diligence to see, is this something we want to add to the watch list for further consideration. So again, I've already done some high-level due diligence, probably in FinViz, and I'll put a link to our affiliate link to FinViz in the description box below. So here's a deeper dive. So I want to just quickly scroll through the analysis article titles and the news to see if I see anything that's, overtly negative. Sometimes there'll be a negative article and you have to take everything with a grain of salt, but the news is of particular interest. Okay, so they missed in earnings, And if we go back and we look at their chart in the July time frame, we see, a major dip. This is clearer again in FinViz, or if I zoom in the chart some. But they had an earnings miss in July, and it dropped significantly there. We can see their dividends, they pay dividends, and that's an attractive factor. And then I want to see, okay, ratings. Well, it says Wall Street and authors is bullish, yields positive. I don't see any red flags there. That's good. I can also read their profile here. I'm already familiar with their profile. Revenue growth, okay, it doesn't look overtly positive or negative. Earnings per share, same, pretty flat. I would prefer to see, an increase in revenue, increase in earnings growth. That would be ideal, but I don't see any red flags, so it's not negative. Scrolling down, we see they pay dividends. That's good. Dividend growth, again, kind of flat, but not negative. Capital structure, we see they don't have any debt. That's a positive. Okay, and then we look at their ownership. In this case, we see it has a very high institutional ownership, and this is very easy to see in this graph in Seeking Alpha, which is nice. If we see a lot of public, that means a lot of retail traders. Now, your institutional traders are going to have a tendency to hold longer, right? They're not going to sell on a brief dip, etc. They're buying it typically for a long term. So positive or high institutional ownership is generally considered good. We see peers. There's a lot of information here, and you can really dig much deeper if you want to, but again, this is just my initial deep dive to see, okay, do I want to add this to my watch list? Do I want to dig deeper? Okay, we see they have cash, no debt, very positive. They've got positive EPS. Again, they're profitable, positive. Free cash flow is positive. That's good. Again, so far everything looks good. I wanted to highlight one other metric that I typically look at, and that's the Altman Z Score, which essentially tells you what is their risk of insolvency, bankruptcy. Anything positive is generally good. Anything negative means there's some risk there. So it's something I like to see, a positive number in the Altman Z. That's something I look for on a general basis. We happen to see, again, high short interest, maybe a target for a short squeeze. So again, in my quick deep dive on pets, everything looks positive. We're going to add it to our watch list based on our analysis in FinViz and Seeking Alpha. And again, I hope this helps you see at least, some of the due diligence we do, how we use Seeking Alpha to do a quick deep dive due diligence or DD on a stock. And again, I'll put a link to Seeking Alpha in the description box below. And we hope this all helps.